Hello and welcome to this Monday's weekly morning market briefing. We've got lots to talk about, but firstly, Israel's death toll as a result of Hamas's invasion into Israeli settler territory has topped 600 deaths, and this is as a result of massacres by Palestinian militants such as Hamas and other Islamist organizations. As well as that, big banks are sitting out of the LBO rebound as a result of being stung by earlier buyouts earlier on in the year. As well as that, the US is now emerging as one of the bright spots, if you will, within the global economy, as a result of having that better jobs data that we saw last week. But we really are going to be talking about how the war in Israel is going to affect the markets today. That's what we will be talking about, and how that's going to affect the week ahead. So we will be coming to the charts near the end, where there's lots to talk about, especially on US indices and gold. As well as that, we've got a lot happening on the economic calendar this week. But let's get straight into it. So firstly, Israel's death toll, as I did say, tops 600. Now, the death toll from Hamas's unprecedented multi-front assault on Israel passed 600 on Sunday, and this comes following Hamas's attack on Israeli settlements around the Palestinian land of Gaza, which began on Saturday morning. And obviously, this is a very complex issue, which passed. The death toll from Hamas's unprecedented multi-front assault on Israel passed 600 on Sunday, and this obviously came after Hamas launched its attack on Israeli settlements around the Palestinian land of Gaza. Sorry, I repeated myself there, but I wanted to make it clear. And, this is obviously a complex issue, but it is a very sad situation that we're seeing, obviously, with, massacres of Israeli citizens, and the escalation to a state of war which Israel has declared. And obviously the ramifications on numerous nations is likely, with information coming out just now around Iran actually talking with Hezbollah, which is a Shia militant organization which works in Lebanon, as well as talking with Hamas on planning this assault, which ultimately was an act of terrorism, where civilians were sought after and killed, including POWs, which would be the military personnel, Israeli military personnel, which were also slaughtered whilst they were sleeping. And at this moment, Palestinian militants are still holding out in several locations across the south of the country. That said, by Sunday afternoon, Israel had regained most of its territory and control over most of these locations. But that said, what ended up happening was they kind of expanded out of Gaza with terrorists, these militants settling in certain areas and certain buildings. So not actually having full control, but essentially just going from house to house, seeing who was there, killing them or transporting them back to Gaza to be held hostage, with some of the militants then staying within that territory, in a house or two, before then, being counterattacked by Israeli personnel. Now, Hamas attacked via land, sea and air before inflicting the highest number of casualties in a single attack with Israel's borders since the state was founded in 1948. And we saw the land attacks after they broke open the gate with bulldozers, as well as explosives, on the southern side of Gaza. As well as that, they assaulted by air, which was very surprising to most people, using paragliders, 2 people on each paraglider, both armed, and they kind of flew over the fences around Gaza, landing in one of the kind of festivals near Gaza, and massacring reportedly 250 people that were just there partying, basically, and they landed all around other settlements nearby, and there's also by sea, surprisingly as well, on dinghies. They kind of went around where would the fences usually be, by assaulting via the beaches, and assaulted checkpoints, which didn't have many military personnel and even civilians, and killed them. And that's obviously very sad to see, with this obviously being the largest single attack in Israel's borders since it was founded in 1948, with Prime Minister Benjamin Netanyahu warning that Israel faced a long and difficult conflict with Hamas as his secretary cabinet formally declared war. So a declaration of war has been made, and this isn't very common, for the West and for most nations. Most nations nowadays do not declare war. So for them to declare war, obviously, is very significant, and the ramifications across markets will be insane, I believe. The kind of fear that this will bring to many people, especially because so many countries are now being involved, and we'll come to that in just a second. And Palestinian militant groups are still holding more than 100 Israeli hostages, including women and children. So, still so many people are being held hostage, and these are in underground tunnels in Gaza. They're in residential buildings, which as a result can't be bombed. They're in, their military camps, and as a result, Israel can't bomb these high, value targets because they have their own people in there, and they can't, make a ground assault yet because, there's just so many people that are willing to fight Israel if they do go into Gaza. With Israel responding to Hamas's attack, which left more than 600 Israelis dead and more than 2,000 wounded, with a huge bombardment of Gaza. And this is what we've seen take place over the last 2 days, where Israel was basically taking out high-value targets in large buildings or taking out, large ammo storages, with most recently, and literally just happened now, the university which once existed within Gaza has been destroyed as it was holding, a monumental amount of explosives, because obviously these are large areas, large buildings with lots of capacity, and they've also been taking out high-value individuals and, taking out convoys that are moving out of Gaza out of Israel back into Gaza, kind of retreating, and they're taking them out via drones and, guided munitions from planes. Now, with the Shia militia group Hezbollah in Lebanon, which we spoke about earlier, obviously, kind of also firing mortars at Israel. And this isn't the first time Hezbollah's kind of involved themselves in Israel and attacked them, and it's not the first time Hezbollah's kind of done this sort of activity. They are a militia group funded by Iran, with extremist views, and therefore, it's kind of unsurprising that we're seeing this at a time of instability for Israel. And Israel, in response to the attacks from Gaza, also cut off the supply of electricity, fuel and goods to Gaza. And we already know, a lot of items are restricted going into Gaza, including people. And so kind of restricting it even further, you have to wonder how this will affect, medical buildings, schools, any administration areas and just the civilians inside. But this is obviously all in an attempt to kind of, strangle Hamas and get them to back down and hand over the hostages, or, get them to leave somehow so Israel can go in there and clear the area. Now, within Gaza, 413 people had been killed by Israeli strikes on territory, and that 2,300 had been wounded. And this is as a result of, the targeted strikes. That said, Israel does try its best often on areas where they're not taking out high-value targets, but just buildings which they don't want to exist. So maybe it's been used before, or they know it's been used by, people that have lived there and related to Hamas. They might double tap the building, so give a warning shot before then hitting it once more. However, sometimes they're not able to do that, obviously, because there's a high value target inside which they're trying to kill, and so therefore, it does end up causing that collateral damage, which obviously has, its large issues around that. Now, Netanyahu said Israeli forces had destroyed the vast majority of enemy forces that infiltrated our territory, and that we have now begun the offensive phase. So this is, it's kind of worrying to the aspect of, world peace, obviously, because offensive actions within a territory like Gaza, which has kind of been left to its own devices a bit for some time now, it's a bit worrying, especially considering there's so many other nations which kind of more allied with Gaza, such as, Iran, obviously, which made that clear distinction. And also, arguably, Qatar has made some comments around, this more so being Israel's fault. And so that, puts to the question, what's Qatar's relations, as well as Egypt, where, yesterday, we saw the issue with the policeman, which I'll speak about again in a second. Now, Netanyahu and Israeli forces had destroyed the vast majority of enemy forces that infiltrated the territory, and that has now begun its offensive phase, as I've said. Hamas has said that its gunmen are still engaged in clashes in several areas of Israel and were being supported by rocket fire. And we've seen this over the past 2 days. Some seriously, surprisingly well-coordinated rocket strikes by Hamas, where usually we just kind of see DIY rockets, but actually, single-filed, rocket formations flying out from, very strong and efficient, means of attack. And this has been supporting the efforts to push into Israel's territory and also to terrorize citizens and settlers of Israel around the areas of Gaza. Now, Hamas also said, this attack, or at least not said by Hamas, but it has been described by many and compared to the attacks on 9/11 against the USA, with obviously some certain parallels being drawn there. And speaking to Netanyahu on the phone on Sunday, US President Joe Biden promised additional assistance for the Israeli military, with more to follow coming over the next few days, with some of the hostages being taken being US citizens, which is obviously worrying because now you're dragging in the US, which may launch its own offensive capabilities to recapture and bring home the US citizens. And in response, US naval ships and military aircraft have been moved closer to Israel and sending lethal aid also to Israel in efforts to respond to Hamas's attack. And as I said earlier, Iran has backed Hamas's efforts to publicly and separate. Iran has backed Hamas's efforts publicly and separately. The Egyptian policeman has shot dead 2 Israeli tourists, and now obviously this worry is, with all of this coming out, the worry really is how will this affect the markets, as obviously, these large ramifications around, the idea of world instability, with so many of these countries getting involved militarily, almost, US providing lethal aid and also moving its ships closer, as well as, Iran, which is believed to have actually supported this attack. It really does set a kind of worrying global tone. And so kind of what we're kind of expecting out of this is largely a decline in US indices as it, the volatility rises, as people sell off, worrying of a global conflict, and also probably an uptick in gold. Obviously, this isn't financial advice, but we're just trying to talk about what the ramifications of this would likely be. And with, so many oil states involved, it's likely that oil also take a turn for the upside, rising in its price as supply issues are, worried about, because obviously if there's a lack of supply as a result of a war where, states aren't able to supply that oil anymore, the price will rise, and so people may try and price that in earlier on. So keep your eyes on the market, but we'll come to that near the end again. But next to talk about, really on a lighter note, is big banks sit out of the LBO rebound after being stung by earlier buyouts, and we've talked about this lots of times before. Now, Bank of America, Barclays, and other large banks that got stuck holding billions of dollars of leveraged loans in 2022 are sitting on the sidelines this year, even as the buyout market revives. The group have become more reluctant to lead the financing for riskier buyouts, worried that these loans would get stuck on their balance sheets, as we saw last year and partly into this year, with certain buyouts leaving the banks unable to sell the debt on, and therefore leaving the transaction on their balance sheets and leaving them at a loss a lot of the times. Several were burnt last year as they struggled to find investors willing to purchase Elon Musk's purchase of Twitter, along with other deals for technology. And this is what we mainly saw, was that issue around Elon Musk spending so much money, so many billions on buying Twitter, And then, the issues of many people saying that, his whole policies were very poor, pushing advertisers away. And so it was really hard to try and get investors to buy the debt that, these banks had accumulated by basically lending Elon Musk money for, the purchase of Twitter. And Gerald Cassidy, who's the head of US bank equity strategy RBC Capital Markets, said banks may be nervous that deals on offer now could suffer the same fate. I know I worded that poorly. Sorry, it came out a bit weird. But basically, he's trying to say, people don't want the same to happen to them. And we're still in these risky economic times. Interest rates are super high. The world economy is declining or, slowing down at least. Therefore, what's the likelihood that a lot of these companies aren't going to be able to pay off their debt? That's to come into question, and so people just don't want to take on that risk, and therefore that's the situation we're in. And he also said, there are times where you want to pay your people to play golf and not make loans. Basically talking about, he doesn't want to, give that money away to anyone, lose it on these deals, and rather would just pay his people. He said this could be one of those times, saying we've also been trying to take advantage of the current market opportunity and the current market environment, said one senior debt capital markets banker, saying the problem we've had is there's not enough volume, because as we know, not many buyouts are taking place as a result of the risky and issues within the global economy around, just getting the debt that they need, accumulating that, getting and also just the risk around having such a poor global economy at the moment is restricting these buyouts. For private equity firms, the pullback by several big banks has limited the pool for potential lenders for big takeovers, therefore pushing some would-be buyers to costlier debt provided by private credit funds run by the likes of Blackstone, Sixth Street and Blue Owl. So, very interesting times for the private equity scene, as well as, big banks and the LBO scene. So keep your eyes on that to see what happens. But next to talk about really is the US and how it's emerging coming out of these recent economic times. So the momentum in advanced economies and emerging markets has slowed towards its weakest levels since the world emerged from the COVID-19 lockdown. So we've been talking about this a lot recently, with the kind of global economy really slowing down with, the high rates which we've been experiencing as a result of trying to combat this high global inflation. And so, raising rates was the way that they were trying to combat that. But in turn, if you raise borrowing costs, obviously you're making it far harder for banks, individuals, businesses to be able to, accumulate that debt and make its purchases and its investments. And therefore, we just haven't been seeing that growth which we might usually expect. And so coming out of the COVID-19 lockdowns, which is when we saw, the kind of inflation rise, which came after lockdown as a result of supply issues, it's kind of been a chain effect almost, the lockdown causing supply issues, causing inflation, causing high interest rates, which is now causing this global economic slowdown. But that said, the US is standing now as one of the few economic bright spots as rising interest rates take their toll elsewhere, which is very interesting to see. Now, indicators of confidence in many advanced economies have fallen sharply in recent months, as have gauges of economic activity, and this is what we've been talking about a lot recently. For example, within the Eurozone, where they've had monumental issues around their manufacturing base, which is a big part of economies like Germany, but have taken the turn for the worst in car manufacturing and that sort of thing. And we've also been seeing this in China with their failing property sector and the ramifications that's had across other markets within Germany. and now across the Eurozone. And obviously Britain's had its own issues with strikes and that sort of thing. So all of these countries are kind of having large issues, and the US is kind of looking the best at the moment, especially economic growth wise as well. But that said, this is all coming at the times where the Fed's supposed to be holding rates the highest for longest, but that's only because they have a good performing economy in comparison to most. So that could tell you something as well. And with global policymakers preparing to meet in Morocco at the IMF and World Bank's autumn meetings this week, and ahead of the meetings, the IMF signalled that the odds of having a hard landing for the global economy had fallen in parts of the strongest performance, in parts for the stronger performance from the US. So it does seem that if the US hadn't performed so well economic wise, we might actually be seeing a really bad, hard fall and hard landing for the global economy coming out of this kind of situation of an economic downturn or slowdown. The fund, however, does fear that the global economy is still facing a weak facing a weak 5-year outlook, due to the high inflation and onerous levels of public debt. And this is not a surprise to us, considering the forecast that we've been seeing a lot recently, where inflation is expected to stay higher for longer, largely in part to these issues around oil prices and geopolitical crisis, which is, very typical and ironic considering the situation that we're in today around Israel and the oil states that surround Israel. So it'll be interesting to see how that plays out in effect to this, as well as, the high public debt, which I did just talk about, which we've been seeing across most economies, especially in the UK and Eurozone, which has just been approaching super high levels of debt. And the only way they've been able to really respond to this, especially in the UK, is just by, trying to cut spending in everywhere possible. Now, according to a senior fellow at the Brookings Institution, major engines of growth around the world were decelerating because of a confluence of short-term factors and long-term headwinds, among them being, tight monetary policy, geopolitical tensions, and high public debt. This is all we've talked about. Also saying economic activity is weakening across the board, despite relatively favourable financial market performance earlier this year. Consumer and business confidence have taken major hits, and with the savings stockpiles dwindling, higher gasoline prices are starting to bite, and the pandemic era fiscal support programs ending, this has led some economists to warn that the slowdown may be afoot. So it's really looking worrying for the global economy. That said, the US is seemingly emerging as a bit of a bright spot. So keep your eyes on the US, certainly, and keep your eyes on the global economy. But next to talk about really is the charts, obviously in relation to Israel and the geopolitical crisis that we're experiencing. So we are beginning to see these effects on US indices. Sorry, I'm tired. We are starting to see these effects on US indices. And what we're kind of expecting after, the US 30, for example, has hit the 61.8% Fibonacci area, we are looking at a possible sell-off, for the US 30. And this is unsurprising to us. We know the US can go further. It's come from, far lower down, following, the issues around, heading into a potential recession last year. So we know that the US indices can go lower. So it's really not a surprise to us, the idea that with such high geopolitical tensions, and the possibility of these geopolitical tensions getting worse and something possibly escalating out of them, it would really be, unsurprising to us to see a mass sell-off in US indices, as we respond to this. And, this definitely would not be a surprise to this. So it'd be interesting to see how this plays out on most US indices. Obviously, we've kind of been declining for some time now, since the kind of rhetoric from the Fed did change, and certain data did kind of change, and since then we've kind of been declining. So it would be no surprise to see this continuation through the form of geopolitical issues. So keep your eyes on US indices, certainly. Next to talk about, obviously, is the dollar, which is kind of in an interesting position because technically, on the kind of technical analysis side of things, it's in a really good, bullish position. It's kind of come into contact with this, bullish trend line that we've seen, form. And it's bounced off this 78.6% Fibonacci area where there was a high level of liquidity. So on a technical front, it would be surprising to us to see a large bullish gain from that area. But that said, we have to look at this fundamentally and look at it from a geopolitical standpoint, and really decide how will the dollar respond to geopolitical tensions. Now, in some ways it could respond very, very bullish, because many people see the dollar as the strongest currency in the world, as the safe haven currency. And so if we are seeing this issue across geopolitics and world tension, it is a great possibility that the dollar makes large gains because people want their money in the safest currency. And with that, the strong, fundamentals around US interest rates may play into that. And so people think that's probably the best place to put my money. But at the same time, you have to ask the question of, well, yeah, it might be the safest currency, but if, all currencies are unsafe because the US is getting involved in geopolitical issues, then why wouldn't you just put your money in gold? And this is maybe what we might see. So we may still see a sell-off in the dollar, despite it being the safe haven currency, just because there's better safe haven assets traditionally, such as gold or even possibly Bitcoin, which we can talk about now, which hasn't actually seen much of a reaction to the events in Israel. But as these events do escalate, it would be unsurprising to us, to see possible rises from a currency which isn't attached to any nation specifically, and so it might be unsurprising to us to see a rise out of Bitcoin as people kind of put their money into safe haven assets and move them out of currencies which may be involved in geopolitical issues. And this is the same to be said for gold as well, really, which, look at this. This is just now, gosh, gold is pushing very high. We saw a massive sell-off last week, but following, the geopolitical tensions, we've seen great bullish performance on gold. And this is, in contrary, to the Fed's rhetoric, which is more hawkish. And so they were kind of talking about it more so in like, oh, okay, we're going to be raising interest rates. So, dollar goes up, gold goes down. But in response to geopolitical issues, gold always goes up. It is the safe haven asset. Just to kind of give you some context to that, if we just go back to when Russia invaded Ukraine, gold was sitting around this level, so the 1,800 mark, and it'd been ranging around that area for some time. Nobody thought it was going to reach the highs of the lockdown period ever again. But despite that, because of the invasion, as you can see, just a look at the bottom, you can see we near the invasion. The invasion takes place then, boom, skyrocket. Gold has gone up and reached its prior highs around the 207 mark. And so it'd be interesting to see how gold plays out from that. We know it's come down into these heavy areas of liquidity on the charts, which we marked out here. It spiked into it many times on the daily charts as well. And now it does seem to be responding very bullishly following the geopolitical news. So it'd be really interesting to see how gold performs coming out of this. My projections are obviously, very bullish for gold unless geopolitical tensions are solved and de-escalated. But escalation does seem likely at the moment, and so we're likely to see that mirrored on silver as well, which is another safe haven asset. And as we can see here, there is a rise coming out of silver. But next to talk about really is US Treasury yields, and obviously because the US Treasuries are linked to the US, not only have they been experiencing a great amount of fundamental issues around more debt being issued by the US, and so more supply of these treasuries being released, which obviously will bring down the price of US treasuries, as well as the fact that the Fed's being more hawkish, and so people are just taking their money out of treasuries and putting them in the dollar. But now adding on to that, we've got the geopolitical issues with the the US, and if we know the US is likely to get involved in any geopolitical conflict, we know the US is more likely to spend more, therefore more likely to issue more debt, and therefore if they issue more debt, we're seeing an increase in supply and therefore a drop in price likely from US treasuries, and therefore a rise in the yield. So I think it would be unsurprising to see a rise in the US yields even further following the recent information around Israel. And lastly, to talk about on the charts is oil, which, look at this. This is the gap in oil following the geopolitical tensions. I mean, seriously, it was, declining. People were saying, gosh, can't believe, oil's kind of come down to these levels after being so bullish. But following, the geopolitical information, I mean, we are seeing such a bullish reaction, serious bullish performance from oil as a result of the geopolitical tensions. And this will only go up if geopolitical tensions worsen and things get worse in the Middle East. So, I mean, we could be looking at the $100 a barrel mark if we do see this escalation in Israel and the continuation of these issues. So definitely keep your eye on oil and look out for that, because this is looking very, very bullish for oil. And it'll be interesting to see how this rise in oil prices might also affect fuel prices and affect inflation across the world. This could really turn out to be a serious issue for the global economy, certainly. But apart from the charts, apart from the articles, next to talk about, of course, is the economic calendar, with quite a bit of data coming out this week. But in fact, the first bit of data only coming out, this Wednesday. So firstly, we have German inflation rate coming out, which obviously is pivotal to the ECB's, monetary policy and the Eurozone inflation figure, because Germany is, the strongest economy of the EU. As well as that, we've obviously got the Chinese new one loans, and obviously with China having so many issues around its debt markets, around its housing markets, this is very significant information. As well as that, we've got US producer price inflation coming out. Obviously, that will be very key to kind of looking at the dollar, looking at what the Fed might react to, because we are expecting an increase in interest rates by the end of this year. So it'll be interesting to see how this plays into it, as well as the FOMC minutes, which obviously will have a great impact on the Fed's policy. As well as that, we've got UK's GDP 3-month average, as well as the GDP for year on year for the UK. So keep your eyes on that, considering we were just talking about global markets performance, global economy performance, and the US kind of being the bright spot. It'd be interesting to see whether the UK can start to make that similar recovery, as we are forecasting a 0.05% recovery on the UK's GDP. So as that, we've got ECB monetary policy meeting accounts coming out, so keep your eyes on that in relation to the Eurozone. As well as that, we've also got core inflation and inflation figures coming out for the US, which is very, very important for the Fed's policy making decisions. So definitely keep your eyes on that in relation to the US. As well as that, we've also got Chinese inflation rate, as well as the Michigan consumer sentiment. So lots coming out this week, economic data wise. Lots is happening in the world, geopolitically, also in Israel, sadly, and also in global markets. So keep your eyes on the markets, watch how they react to these geopolitical events. Have a great trading week, and stay safe. See you later. Bye.